What's up, apes? Welcome back to the Peels video stream of the day. My name is David. It is currently 7:42 p.m. and boy, do we have a lot to talk about here today. We're going to be kicking off with talking about the next hot investment opportunity globally. So it's a little bit out of left field, or some might say a little bit out of the blue if they don't understand baseball references. Although I don't know if anybody actually knows what out of the blue really means, but we're going to be keeping you covered with exactly what's hot going forward, what's going to drive you to that early retirement, as long as we're not incredibly wrong about everything we say, which kind of tends to be a problem. But anyway, then we're going to talk into some of the hot stock movers of the day, what's rising, what's falling. We'll make sure to bully a lot of people along the way. Then, of course, we'll finish up with what's going to be driving returns over the next couple of weeks here. We are entering the belly of the beast with earnings season here this week, and we want to make sure you guys are staying tuned with conditions and exactly what we can expect going forward. So make sure you stay tuned until the end of the video to cover all of that. At the same time, make sure you join the Discord channel as well. I mean, guys, we've had this thing running for over a week here now, and I still don't see you in it, which really grinds my gears. It breaks my heart every time, drives me up a fucking wall that you haven't joined the Discord yet. So be sure to join that. I'm going to make it nice and easy for everybody and include a link in tomorrow's Peel. So go check that out in addition to a lot of the graphs that I'm going to be referencing, but I just can't exactly figure out how to show them on this video at the same time. You guys know I'm not the best with technology, so if anybody has any tips, I am open to them. Please feel free to let me know. Give me a shout right there. WSO Alpha portfolio, very strong performance to kickstart this week, up about 58 basis points. Obviously, we were pretty pleased to see that we're back to rising after it felt like we had been falling off a cliff for weeks and weeks on end right there. Now, we did underperform both the NASDAQ and the S&P 500 on the day. That means the NASDAQ has now overtaken us for year-to-date performance, but we are still beating the S&P 500. It's really too easy, not much of an accomplishment to beat the S&P when you got brilliant genius apes like us and all of you guys working together as a distributed computing network to figure out what the next hot stocks are going to be. So, relatively solid day. Bitcoin a little bit wobbly ahead of the halving here, expected to occur this week, or it might have already occurred, to be honest. I'm not really too sure if that happened this weekend. I'm going to have to go and double check on that, but I'm sure one of you Bitcoin bulls is going to roast me in the comments already. So please feel free to let me know. As always, we want all the smoke, guys. Let's talk about some banana bits, some of the shit that we didn't really feel like going deep into here today, but we still wanted to give you guys a heads up about. Of course, we wanted to link to CNBC or mainstream media's kind of breakdown of what to expect with big tech earnings later on this week. Now we have Tesla coming tomorrow. We have Meta on Wednesday. We got Microsoft and a bunch more on Thursday. I think we have Amazon and Google on Thursday as well. So that's like $5 trillion in market cap in a single day. We have more than almost 600 companies reporting on Wednesday and Thursday alone. This week, it's pretty close to 1,000 companies in total. So we're going to be busy. We're going to have a lot to talk about. Expect a lot of long videos this week. The FTC is getting in the way of even more corporate lovemaking here this week. I mean, we just want to see companies get along. The FTC is very much getting in the way of that. So the companies behind Michael Kors and Coach, I think it is, whatever the fuck. It's Capri Holdings and Tapestry. They have not been allowed to merge because of the FTC. Walking 𝗪𝗏𝗀𝗀 does not want to see that go down. She doesn't want to see the price of a Birkin bag increasing. I don't know if that has anything to do with the companies, but my girlfriend just said the word Birkin bag, so it's kind of top of mind right now. What else is top of mind, however, is the fact that Facebook just open sourced their Llama 3 model. So this is Facebook's home-built LLM. It's one of the hottest things on Twitter right now, largely because Mark Zuckerberg is looking very hot on social media lately there too. He was blowing up over the weekend, and I was worried that my girlfriend was going to fly out to Palo Alto, but thankfully, still here for now at least, so we'll see what happens. I really hope that beard photo of him turns out to be fake, but we'll see. I'm sure all the other boyfriends in the world do too. Finally, it is time for AI, artificial intelligence, and people like Friedrich Nietzsche, Immanuel Kant, Plato, whoever the fuck else you want to say, to team up with artificial intelligence. It's a Harvard Business Review piece by the Chief Information Officer at Goldman Sachs. You might have heard of it before. He is basically coming out here and saying that it's very important for engineers to understand philosophy because it helps them code better and might slow down artificial intelligence's takeover of the world, humanity, and the universe. Anyway, on that very high note, let's get into the big story of the day. We are talking about bulls, bears, and of course, tigers. Like I said, guys, we got the new hot investment opportunity. This is kind of the long-term trend that you're definitely going to want to be aware of if you hope to retire at some point in your life. And it's one of the most important things going on in markets right now. So taking a step back, let's talk about the most important things in life. Of course, that is friendship, love, and the value of your stock portfolio. That's really the only things you need to make sure that you're happy. Your stock portfolio doesn't even need to go up. As long as it's changing and the thrill of the game is there, that's all that I need. And let's face it, none of us have any chance of achieving friendship or love. So, let's just stay focused on the stock portfolio part of things. Stay in your lane, kind of know what's going on here. And of course, that next hot investment opportunity comes from a very hot place in the world too, and that of course is going to be India. India, this is the world's most populous country. They have about 1.422 billion people as of right now, according to 𝗪𝗏𝗽𝗀𝗀𝗀𝗀𝗏. They have the 5th largest GDP in the world, behind that of the US, China, Germany, and then Japan. Or it might be Japan and then Germany, actually, that's what I think it is. But India is at number 5, and it's not going to be staying that way too long. This country's GDP grew by compounded annual growth rate of about 7.7% between 2009 and 2019, barely slowing down whatsoever. It's still trading at about 6.57% annualized growth going forward, and it's expected to absolutely take off between now and 2030, becoming the 3rd largest GDP in the entire world by that year, behind only the US and China. If those countries are, if humanity is still around, who knows with this AI bullshit. But either way, according to estimates, like I said, it's not going to last very long here. They are going to be the bronze medalist of global GDPs relatively soon. So shout out to India on that already. Now, the reason that we're looking at India so much is because India is different than other hot emerging market opportunities that have made themselves available in markets over the past couple of years. I know that's the most dangerous saying in investing. This time it's different, or this something is different, but it really is this time. We look at some of the other hot investment opportunities over the past couple of decades in terms of EM. We have places like China, Russia, we have Japan for a little bit right there. None of them have what India has, and that's a combination of demographics, culture, and politics that drastically supports extreme outperformance in terms of global markets and translation into stock portfolios in the long term. First and foremost, we can see that India's benchmarks are very similar to that of the United States in terms of their overall makeup, completely dominated by technology, financial services, not so much big pharma as we are here in the United States, but then again, not every country has as retarded policies around pharma as we have. So, can't really blame them on that. A lot of consumer discretionary because there is a booming middle class in India, and that is really the key right there. Growth in the middle class, because what does the middle class in America like to do? They like to spend money, get fat, and then spend even more money, and that's what we want to see for the development of an economy. India's doing a great job contributing to their economy. The United States is still doing a pretty good job, but over the long term, India's going to be growing a hell of a lot faster. Now, the biggest reason for that, in addition to all of those things that I just said right there, or the biggest reason of what I just said between demographics, politics, and culture, is far and away demographics. So there's this thing called a population pyramid. You guys might be familiar with this, but effectively what it does is it plots a country's population on a graph. And on the y-axis, I know math, I promise. On the y-axis, it's ages going up and down, starting at 0 and all the way up to billion years old, or however old your parents are at the very top. And then we have the percentages of the total population on the x-axis down below. So the wider it is, the more of a country's population is in that age range. And believe it or not, you basically want a ton of people who are under the age of like 60 or so. That's kind of like the cutoff where they start to become more of a drain on the system versus adding to the system. And I don't mean to disparage the elderly among us. It's going to happen to all of us eventually. We're going to be old and a drain on our children, on our communities, and society at large. It's just part of the process of aging, I guess. But it's great for an economy when you see that population pyramid very bottom heavy. You want it to look as much of a triangle as possible. I promise I'm not part of the Illuminati there, or maybe I am. But either way, we look at India's population pyramid, it is like a perfect triangle. There's a shit ton of people between the ages of 15 and 45, I would estimate, based on my back of the envelope math right here, that's like 60 to 70% of the population, maybe even more at this point, but that's exactly what you want to see, because those are people working or should be working. Those are people paying taxes or evading taxes. We kind of respect both of them equally over here, but still, this is what drives the country forward. It's having a high tax base, a lot of people working, contributing to economic growth, and then using their earnings to recontribute to that economic growth once again. Now, if we take a look at the United States and China for comparison, we can see that the US is still relatively decent shape. It's more of a rectangle, I guess, whatever the fuck shape that is. But effectively, our population is a lot more distributed between the ages of 60 and 10 than India is. And having a lot of 10-year-olds, believe it or not, that's actually a good thing for an economy, but having a lot of old-ass people, not great. And thankfully, the U.S. is a superpower of immigration that kind of keeps our population pyramid relatively stabilized. But when you look at a country like China, completely fucked. I mean, it's very, very bad to see something like this. China kind of looks a little bit like this, and then it extends out between the ages of about 40 and 60, and it goes like this, then it goes back narrow, and then it extends out once again. So there are quite a lot of people in the 30 to 34-year-old age range, but damn, it is looking rough below that. Nobody's fucking in that country. Nobody's having any kids. I mean, the one-child policy really screwed them at one point. No pun intended, actually. That was off the dome. But so the one-child policy kind of really screwed them. China's population, they're aging very heavily and becoming quite the drain on the system. That was exactly what happened with Japan over the past couple of decades as well. And then Russia, everybody is basically just trying to leave. So none of these other countries had the demographics that India has right now in order to be able to grow into that potential that it has. In addition, India is the world's largest democracy ever since Modi, and really since, what's her name, Indira Gandhi left office back in the late 70s, India has been moving more towards a free market, democratic, capitalist economy. That bodes very well for a growing middle class, growing standard of living, and just a way better life and better stock portfolios for you and me if we get in on that early enough. In addition, we know that Indian people here in the United States, it seems like they're the CEO of every major company, very hardworking group. I think they have the highest average incomes in terms of, like, if you break down the US by demographics, I'm pretty sure Indian wage earners are at the absolute top, averaging like $150,000 to $200,000 a year. Personally, that kind of makes me wish I was Indian, but my Irish blood shines through, as you can see with how extremely pale that I am right here. But India, absolutely off to the races. The country is completely popping off. One of my boys actually lives in I'm going to try not to butcher this, Gurugram, I believe it's called, and he's having a great time out there, tells me to come visit him all the time, really enjoying it. So, very surprising to see. I might have to go get boots on the ground and take some film for you guys and post it up there as well. If any apes are in India, let us know how it's going, or if we're completely way off on our takes here as well. But for now, let's go ahead and move into the what's ripe names of the day. Matterport. This was a very hot stock back in 2020, 2021, the bubble of absolute idiocy that was going on back then. This is a company that essentially does 3D mapping, or like 3D projections of essentially real estate spaces. You can do like a virtual house tour or virtual open house of some building with Matterport, and they were up 175.9% today. So how does something nearly triple in price in a single day? Well, the only answer is an acquisition, and that's exactly what happened in Matterport yesterday. I thought Matterport was more of like a VR company that would be doing shit for like Meta or like these other, maybe they are, because it seems like this would be pretty cool to incorporate in a VR device, but they were purchased by CoStar Group, for those that don't know. CoStar is effectively the Bloomberg of the commercial real estate market. Back in my days as a commercial real estate intern, this was something that we used constantly all day, every day, and they are buying Matterport so that they can do a better job of giving those open houses and become an even better data source. Matterport absolutely off to the races on the day. Feel bad for anybody who is shorting that thing. Moving on down below, speaking of shorting things, we have Zions Bank Corporation up 3.5% on the day. Very respectable. I mean, for a regional bank coming out of the calamity that was 2023, up 3.5% is basically the same as tripling in a single day, especially when your revenue falls 11% and you still beat expectations somehow. That's completely fucking miserable that expectations were that low. Net interest income down 14%. Margins actually improved somehow despite them falling 14%, but it was only about 3 basis points of improvement, 2.94%. Either way, they're still alive, so investors, management, they are as happy as they can be. All right, moving on into some of the shitty performers of the day. We have EV companies first and foremost, and specifically we have 2 EV companies in question right here. I believe this is the second and third largest by total electric vehicles produced for pure EV players, and so that's going to be Tesla and Li Auto out in China. Both of these companies are continuing to absolutely slash their prices. Obviously, that's not a great sign for investors, and it means lower margin. So it's kind of a double whammy, because clearly it means, one, the demand isn't there still, despite the fact that rates are somewhat normalizing. I mean, nobody on earth expects a rate cut this year. So there's basically expectations for as many rate cuts as there are going to be gainers in my portfolio, close to zero, effectively, probably going to be zero or even less than that if that's possible. But either way, obviously companies were very rattled to see that Tesla and Li felt the need to continue to slash prices to drive demand. Finally, we have Verizon, one of the most hated companies in America. So everybody was throwing a party yesterday as it was down 4.7%. Nobody threw a bigger party than Ryan Reynolds, however. We know Ryan Reynolds is out here slinging Mint Mobile all day. Every fucking time I watch a YouTube video, that guy's on there yapping about something to do with Mint Mobile. Either way, he's super hot, so I can't turn off the camera. But it was a bad day for big wireless yesterday. So, Verizon came out with their earnings report. Sales grew a miserable, pathetic, embarrassing 0.2% for the year, up to about $32.9 billion. That's about $32.8 billion too many, if you ask me. But EPS also beat estimates, quote unquote, adjusted basis. Anytime you see adjusted, just replace it for bullshit. That's what Warren Buffett, Charlie Munger both say, and they're both way smarter than me, so I'll do it. But the real EPS was about $1.09 per share, so that does come below the $1.12 estimate. The firm did lose fewer wireless subs than expected, but still, the fact that you're expected to lose wireless subs, pretty embarrassing. They did manage to grow broadband customers in that time, however. All right, moving into our last stock of the day here, we are squeezing the lemon. You know when you're driving down the street and all of a sudden the fucking green light turns into a yellow light and you're like, I just got to go through? That's kind of what S&P 500 earnings are doing so far this quarter. We were kind of turning them into a bit of a yellow light because everybody was expecting somewhat of a slowdown coming into 2024. Not at all. The light went yellow, then immediately back to green. Off to the races so far. We have about 14% of total S&P 500 companies reporting. Most of these have been like the big banks or the absolute shitcodes that are in the index for whatever the fuck reason. We have seen some very strong outperformance. Really, materials and utilities are kind of the only sectors that have been below EPS estimates in terms of basically this is the only sector that on average its EPS has come in below what analysts were expecting for sector-wide performance. This S&P 500 as a whole is still looking very good. We'll see if that actually holds true later on this week for the majority of earnings season, as we probably have something like 40 to 50% of total S&P market cap reporting this week. Might be even more than that, quite honestly. But either way, an absolute shit ton. We don't have Apple or Nvidia for a couple of more weeks, so it's probably not too much. But either way, there's absolutely no signs of a slowdown. All analysts have been doing is increasing their estimates for earnings per share for the first quarter. Very solid look for the company. Now, this is kind of a slap in the face to us at the Daily Peel, however, because going into 2024, our big macro concern was S&P earnings. We weren't sure if consumers were still going to be willing to accept the inflationary pass down that companies were passing to them in 2023. Clearly, nobody cares about inflation as much as Twitter would have you think, because consumer spending has been off to the races. Company earnings reports, have been completely blowing up. So it's looking very good so far. Fingers crossed it actually stays that way. All right, that about does it for us here today, guys. Of course, we did want to finish up with a quote that somehow relates to what we said. So we went to the Indian Warren Buffett. That is this guy's nickname. I apologize in advance because I am going to butcher this name. But we have Rakesh Jhunjhunwala. I believe that is how you pronounce it. I did my best right there. Somebody please correct me. But he is known as the Indian Warren Buffett. He's one of the greatest investors of all time. Completely flies under the radar. Nobody gives him enough credit. Go read his shareholder letters because they are quite interesting. A lot of similar ideas to like the Ben Grahams and Warren Buffetts of the world. But one of my favorite quotes by this guy is, growth comes from chaos, not order. Nothing grows. You know, it reminds me of that quote that's like, what is it? Smooth seas never made a skilled sailor. Like, you need that challenge, that difficulty to actually grow in your life. And that's exactly what Mr. Rakesh is telling us to do right here. Once again, somebody way smarter than me, so why don't we all just shut up and listen to him? That about does it for us here today, apes. Thank you again for joining us. It is currently 8 p.m. on the dot. Holy shit, that's pretty impressive. Not that I really know why. After hours trading is officially done for the day. Guys, let us know what more you want to see down below. Join that Discord before I fucking kill your entire family, blow up your house, or whatever other threats that you need for me to join the Discord. So please go ahead and join that. It's a lot of fun. We're popping off. Anytime you send a message in there, I am guaranteed to respond. So please let us know what's on your mind, what's in your portfolio, and most of all, what else you want to see from Alpha, from the Daily Peel, and from WSO going forward. Like I said, thank you guys for watching here today. Have a wonderful rest of your evening and a great week. We will see you tomorrow. Happy investing, happy trading. Bye now.